So the question is this. The question is what's going on in the market today? And what's going on in the market today is very simple. It's very simple. The market is down. Why is the market down? This is also very simple. The market is down because it wants its rates cut. Yes, it wants more rate cuts. At the end of the week, you're going to hear CPI. So, as we've seen before, this is kind of a pattern that's happening in the market. What the market wants is basically telling the Fed it wants more rate cuts. Simple as that. Now, of course, we had a problem last week with the strike. That's over with. We had a problem with unemployment that seems to be gone because unemployment was actually lower than expected. We'll talk about that to see really what this is all about, because this is kind of weird numbers that we're getting. But at the end of the day, like I always tell you, it's not about what's really happening. It's what they think is happening, because we're trading on information. We're not trading on facts. I know this is kind of scary, but that's how it is. So what do we do? Well, today's topic has to do with day trading versus swing trading. We're going to talk about that, but we're also going to keep track of what's going on in the market as well, because lots of things are happening. Tremendous amount of things are happening. And don't forget, at the end of the week, we're going to have the CPI. We also have on the 10th, this week is a Tesla week. Not today. Tesla is not doing that great, but that's because the market is not doing great. The market is not doing great because it expects more rate cuts. Now, of course, there's a thing going on in the Middle East with the potential impact of the what's going on there. Oil is going up. That's because obviously the problem you have to understand that if oil actually goes up for real, that's going to create inflation. Not inflation in the way you're thinking. Inflation as far as the numbers that the Fed is looking at, which is the CPI, which is a number that keeps being changed all the time. I mean, the CPI today is not calculated the way the CPI was calculated in the 60s, 70s, but that's besides the point. The point is that they are looking at the CPI, and if oil goes up and the CPI is going to go up, they're going to say, guys, hold on. When I was saying that we had this thing under control with the inflation, we don't have it under control. So therefore, we're not going to reduce rates as much. And that's what the market is telling to the Fed. I don't care about what's going on in oil or whatever. Lower. But the Fed is kind of saying, well, yeah, I mean, the numbers seems to be under control, and I'll find out on Friday. But frankly, if there's a war down there and they increase the oil, right, oil prices go up, then that's going to impact the CPI number. The CPI is a number. Forget how it's calculated. The point is that it's a number. And if that number goes up, then the Fed is going to say, you know what, I'm not going to do 50 bips. I'm going to do 25 bips. That's kind of the fear right now. And that's why the reason why when I'm looking at my chart right now, everything is red. So let's talk about day trading versus swing trading, right? Let's take a look at what's going on here. Really. Well, I will tell you that what you want to do with day trading, hopefully it's not too complicated for you, but day trading is essentially exactly what it sounds. It means I am trading for the day. How do I do that? Well, I just buy and sell for the same day, and as simple as that. So, and not a big deal, okay? And swing trading is I buy today and I maybe sell tomorrow or the day after. In and out, or in and out. So what's the difference? Well, I mean, for the day trading, you really have to make sure you understand what's going on. Forget what's happening in the name. Forget what's happening in the market. You need to simply understand what is going on with the price itself. There's a price risk and the credit risk. Forget the credit risk. Forget all that. Just look at the price. It's like if I'm asking you, I keep saying that all the time, but hey, what's the weather going to be in the wintertime? You're going to say, it's going to be cold. And how do you know that? You're a genius. That's exactly what this is, right? So I see a lot of videos where they say, well, I do this and do that, and then look at this pattern and blah, 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 blah. Listen, if there was a trick, somebody would have done it. They wouldn't be talking about it. There'll be someone on an island somewhere. So they're probably trying to sell you something. The same way I'm trying to sell you something, which is basically subscribe to my channel, join my Patreon, show you my trades, show you what's going on there. Anyway, but more importantly, I mean, this is not I'm not making a living out of this. I am willing. I'm making a living in terms of instructing you. I love teaching. Therefore, that's what I'm going to do for you today. So, if you could make some money out of it, even better. So, what are we doing in terms of day trading? So, let me show you a clear example. A clear example of what I'm doing. So, let's go to, for example, the let's take a look at GCT, for example. GCT, we made a bunch of money last week because, all right, here's GCT. GCT is opening, sorry. GCT, are we open? Yeah, 9:30. What's going on here? There we go. So we're opening again around nowhere. We're actually down. So let me show you an example, right? So look at how this name trades. Look at this name traded. This was a shame because and if you go into my Patreon channel, you'll see what I did. But basically, I had a position. I unwound when it was doing here from the day before. Then I bought again. And maybe I could show it to you, actually. Maybe I could show it to you what I did with the GCT call October 18th. And maybe we do it. Maybe we do it again today. You know. Let me show you what I did with these guys. So let's share my screen right now. This is quite interesting. So look, this is the option I did, right? So basically, if you look at this, you could see October 2nd, right? Bought 10 contract. This is the 1018, and the same day is sold at 1200, made $150. Okay. Then October 2nd, bought again a bunch on contract at $900. And then unwound the whole thing, made about $400, right, on the 4th. So $200 a day. Now, don't forget, this is $200. I mean, you see, it's not much money, sure. But $200, out of 900, that is about, what are we talking about here? 25% in one day. There's about 250 trading days in the year. So, 250 times, we're talking about 3,000% annualized. So don't knock it. Okay, this is good stuff. Okay, then on the 4th, I said all along, there's a pattern going on here. There's definitely a pattern. So let me get in again. The same day I went in again at 105, and I got out 115. Right, and do you know where we ended up on that option? That option ended up 148, 150. I could have made $1,000 on that day. Okay. So what's going on with this? Well, basically what you're doing is you're not looking for 500,000% here, at least annualized. Annualized, it is 5,000 to 3,000. But for the day, you go in, get out. Now, how do we do? Well, let's go back and take a look at how GCT is going today, because there might be some attraction here because it's not up. So you don't want to be running after whatever it is. You do never run after a trade. If the trade is out, let it go. Okay. So let's take a look at what GCT is doing right now. Okay. So here's GCT right now today. So remember, we ended up, 2864 is kind of our number, right, that we're looking for. And here we are right here, 28, 27. Right? Now, keep in mind that this name, when I look at it overall, right, This is a trend here. Okay, so there's definitely a trend. We're trending up here. We're definitely trending up. We want to make sure there's not negative news. Giga Technology, a sharp software stock to invest in right now. There was some good news on that day. The best Russell to buy, according to an analyst. There were two very interesting news articles on this name. Now, is it real? Is it not real? I don't care. All I know this is real. I mean, what I mean by real is that somebody said something positive, right? If you go look at this article, right? If you look at this article, recently they combined 7 Russell 2000, and now Russell 2000 right now is a big thing to do because obviously it's small caps, low rates, small caps, great. So what did they do? Story continues, blah blah blah. Okay, Giga, see they have Giga Technology right there. Average price target 105. Number of hedge fund holders 5. So hedge funds are taking a look at them. And basically what they do, the platform facilitate cross-border transaction in various categories, including, so they're very diversified. It has strong operational infrastructures. They're doing quite well. And it's also reflecting the company impressive gross merchandise volume. I mean, if you look at a previous video on this, you will see that I told you that the name is doing great, that the name has quite a few things going itself, and financially speaking, is doing great. So I'm not concerned financially, right? So there was this news. Then we had this other. Today's another new. Today's well, this weekend, I think. Cheap software stock to invest in right now. Avoid hype and focusing on downstream opportunity. Now, read the article later on. That basically again they compiled a list or whatever. So the name is doing quite right. What do they mean? What do they mean when what do they mean when they say cheap software? Right. That is what they mean. Look. Right. You see this P ratio of 10? That's what they mean by cheap. Right. We don't want 65 for Tesla or 57, although we have to do it in a certain particular way. Okay. So look what's happening right now with the name. Look at that. 27. Right. We're down. Now, the way this thing trades, quite frankly, is that look what it does, right? It will trend up usually in an up market. Right. It goes above the 50, the moving averages, go back. It hugs the 50-day moving average. It hugs it. It hugs it. It hugs it. What's happening here? Look, this thing is gonna hug again right here. Look, and what we're gonna do, we're gonna observe it. We're gonna look at it. We're gonna take it quiet. We're gonna say if the 52 moving average, it's gonna come here. Sorry, it's gonna come right here. Look carefully at what happens. And while you're doing that, while you're looking, I'm going to put on a trade right now because I think this could be very interesting, especially if it goes lower. Right. So basically, the base and of course the market is a bit skittish right now. Now the October 18th, ooh, that's a tough one here because it's down 19%. I mean, if I do the October 18th, it's going to be gone. It's going to be gone. But anyway, let's take a look at it. You see what's happening? Look carefully. Right? It's going to want to come back here. It's going to want. So now how you take advantage of it? Well, you could buy a bunch of stock at $27 instead of $28.40. Could make a, a couple of percentage points. I mean, not a couple, but some. Annualize it. It looks pretty good. What do I mean by that? Look. It's at $28, right? So let's say it goes from 28 to 28.40. So 28.40, and then you sell 28.40 divided by 28 equals time 100 minus 100. It's about 1.42%. What am I going to do with 1.242%? What do you mean what you're going to do with 1.42%? There's 245 days in a year. This is equivalent to 350% annualized, right? The stock is great. What I mean is there's no financial issues. It is being recommended. It is asking for you to make money off of it. Now, of course, you could make a lot more money if you go with options. The only thing is you better be careful because if you get it wrong, I mean, that thing expires pretty soon. So you probably don't want to do that right away. So let's take a look at it. Look at it carefully. Look what's happening. Look how this baby is moving, right? Inching himself up, inching himself up slowly, very slowly. In the meantime, Tesla puts up 8%. ACMR, something is going on with ACMR as well. Okay, let's let me see what's going on with ACMR while you're watching this. Oh my God. Unfortunately, this was one that I was looking as well, and I didn't do it, and I sold it. Well, what's going on with ACMR? And I recommended ACMR. Please, digs more than broader market what you should know. ACMR research provides backlog data. The P ratio is already 18 though, so ACMR is doing quite well. But I did that before. I ran after it and then it went down. So what else do we have here? So let's go. Let me see what you're doing here. You see what's happening? It's inching itself way up. Slowly but surely. The same thing happened. We'll come back to it in a few seconds. Let's stop sharing that screen. No, as you notice also, what we're doing is you're monitoring, or you can't just sit there and wait for you got to watch it. You got to understand it. You got to see what's happening with it. You got to feel it. You got to know it. You got to touch it, right? You can't just but believe it or not, the more you do it, you're gonna get a feel for what's going on with the stock, right? My biggest disappointment, I have to say, and this is when sometimes you have to stick with your conviction, and sometimes you don't, and then that's a mistake. If I look at ACMR, that's disgusting, quite frankly. But you can't get too emotional involved, right? I bought, and it was a mistake actually when I sold at 294. Look, let me show you what a mistake looks like. So you know what's about day and swing trading, what the reality of it is, right? So look at this, right? See this? I put 10 contracts on that baby October 1st, right? 360. Then I thought I was selling at 360, but I wasn't. I didn't pay attention because I looked at the day gain with total gain, and I took a loss on that, 294. Right? Today, that thing is at $8. Look, October 2nd, 294, the $3. It's at 855 today. This is sickening me. Now I feel like I want to. But you see, if you go after something like that, then that's what happened the last time I did, and then I'm not going to get a good feel for this name for some reason. Why don't I get a good feel for this name? Well, let's go and see. Let's take a look at the ACMR so you see how that name trades and why it's a bit different. Look, please. Now, of course, you have to understand, if you look at what's really going on over time, I mean, this thing was at $18, now it's at $26. Now, having said that, was that thing used to trade, right? Don't forget, March of last year, this was $34. Okay. So this is not like a wow, what's going on? The only thing with a name like this is that look at the P ratio, is already at 18, and the forward P is at 13. Right? That means that earnings per share are expected to go up from 1.26 to 0.183. But unfortunately, based on the stock price today, it is a bit rough going. It is a bit rough going. And you could see that's because the stock is getting ahead of the earnings. But again, this is the same story as GCT. This is a great little stock that you need to monitor and love and like. Look, broader market, what you should know. There's a couple of news on this name that are kind of positive. But again, at the end of the day, this is kind of a weather pattern here. This could be an interesting call right now. Short dated, very short dated, so you could pick up on that swing, on that day trading, and then you could let it go. Okay. So these are the two names. You know what? Let us go back to GCT. You see it? You see that? See what I'm saying? Look, see? I'm coming back to you. Okay? I mean, you have to understand it. You have to learn it. You have to understand it. So it wants to hug back that 50-day again. It's doing it more slowly this time, I have to say. But what did he do last week? What did he do Friday? Look. I love you. I don't love you. I 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 don't love you. I love you. I don't love you. You know what I mean? It's hugging, 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 hugging. So this is, this is easiest way to make money. And here we go. We are now down in the green, as I expected. So you could have made 350% right now just by listening to what I just said. Simple as that. It's a little scary. Now, the other thing that I want to show you, which I think is quite interesting, is this whole discussion of what happened on Friday, because I am concerned, maybe or maybe not, I don't know, we're going to find out, but is really going on with those numbers on Friday, because they were great. They were fantastic.
All right, forget about Goldilocks for the masses. Global in the sweet spot after 26.
Now remember, this was Friday, okay?
26 rate cuts last month and a lot more on the drawing board. Central banks seem like squirrels chasing each other in the park. You ever watch them? They're oblivious to you and everything else around them.
So what you're looking at is you look at all the cuts that happened in 2008. So now 2008 was a problem. Obviously, I don't have to remind you. There was, the 2008 financial crisis. So you could see, right? You could see that, like all the cuts they did, cut, and then they stopped doing cuts again, and then cut, huge amount of cuts with the 2020, and then we did again 2 years ago, right? Starting to 2023, huge amount of cuts.
But they're having a whole lot of fun. What does it mean, though, for people who aren't in the stock market? Because we know, obviously, the stock market loves it. I'm going to bring in QI Research CEO, Chief Strategist Danielle DiMartino Booth. And Danielle, I mean, it just...
No, I will tell you that what Danielle has been saying past year, that there is a recession going on. Yeah, so she's going to try to defend a beefsteak.
It feels awkward, right? Everyone's saying something does not compute here. Either the central banks are completely wrong or the data they're using is completely wrong. Just don't know what they're trying to achieve.
Or because what they're basically saying is that, listen, you've lowered the rates. I mean, you raised the rates 2 years ago. It's a little complicated, but let me explain to you. They raised the rates about 10 quarters ago. So now we should start feeling the impact of those rate increases. I know, because it's like, yeah, but that happened a long time ago. Yeah, but the what they when we say they raise the rates, they're raising the um, the Fed fund rates, which has nothing to do with you. It has to do with the bank, but it just sets a tone. So by the time that rate increase goes through the Fed fund rates, it goes to the banks, and then the bank raises the deposits, and then eventually it goes to the mortgage. Blah blah blah. It takes 10 quarters before you feel the impact of those rates increases. The same way it takes 10 quarters for you to feel the decreases. Remember, it's not what's happening today. So now, because the rates have been going up, right? We're saying, well, how come we're not seeing a decrease? How come we're not seeing a recession? Because every time we've done that in the past, we had a recession. Most of the time, when the Fed raised the rates, you end up in a recession. I mean, you beat the inflation, but you end up in recession. But they're basically saying, well, it's got to be something wrong. Well, maybe not. Maybe the fact is that we are not as sensitive at those rates anymore. Remember, a lot of spending on AI, regardless of what's going on. And I think I did a video, a short on this morning or this morning or last night actually. There's AI is being spent. There's a lot of things happening with the fact that the economy, there's still money, fiscal money is going into the system. Basically, without getting too complicated, we are less sensitive to the rates that we have in the past. So yeah, if you look at the books, then yeah, we should be more impacted. But maybe this time is different. And they say, no, this time is not different. Something is wrong.
Charles, I swim in a sea of confusion. I'm the opposite of that squirrel running around in the park right now. There's so much in the way of that we must disregard. We had S&P Global Manufacturing and Services, ISM Non-Manufacturing, ISM Manufacturing, all four of those employment indexes for the month of September were negative, were contracting. And in that kind of a month, this is the employment report that we get. It's extremely confusing, Charles.
So she was hoping, not what she's saying is that the unemployment rate went from 4.2 to 4.1. She's saying, what? That can't be. We are in a recession. That number should be going up. So there's something wrong with the data.
Charles, you mentioned people who are not in the stock market. 75% of the jobs that were created last month were in healthcare, leisure and hospitality, and of course, government. These are very low-paying jobs, and it's emblematic of what we've been seeing one month after another. And I'll add one more thing, Charles. We had positive revisions to the month of August, and everybody was like, "Yay, we have positive revisions for once." It wasn't a negative. You know what? There were negative revisions to private sector jobs for the month of August. It was only government jobs that caused the upward.
So basically, she does not like what she's saying. She's saying what you're saying is not what you're getting.
Upward revision.
Another thing that really stands out to me is the sharp. I mean, we're talking about a major decline.
Now, the thing I need to tell you also, he has been putting her on this on this program a lot. So he's been kind of agreeing with her. So now they gotta get out of this thing somehow. Remember when I told you also, you need to understand who the players are. Right? This channel, which is a smart investor, is all about educating you. And obviously, you need to understand the market. You need to understand, the way the name trade. You need to understand your name, but you also to understand who the player, who is talking to you, and why they're saying that. Now, both of them been saying recession, recession, recession. And then they get this number and boom, no recession. So they're disappointed. So he's trying to help her out.
And full-time workers, down almost 500,000 from a year ago. That's real life. That's what real life people see and feel.
That is a real life people see and feel. And you have to remember that every single job that one person has, if one person has 3 part-time jobs to make.
But you could see full-time job growth year-over-year negative. They say, look, this is from Bloomberg and Wellington, whatever, which I'm not even sure the Fed looks at this. But look, the numbers are going down, which means there's less full-time growth numbers going down. It's going down.
Ends meet, that's counted as 3 jobs, even though it's just one person. And right now, we're seeing multiple job holders at an absolute record level. The sum of continuing jobless claimants and part-time workers in the United States is higher than it's been. And it is also, and there you go, multiple job holders.
Well, it's also saying, okay, you know what? The unemployment is going down, but you know what? That's not fair because these people are holding more than one job, so you're not seeing it.
It's in recessionary territory as well. So what does it say that we have to have multiple jobs just to make ends meet, Charles? Is it because we've got too much energy? Is that the explanation? We just want to work an extra job.
Yeah. Well, we're like that. We seek fulfillment in different ways. So what does this leave, again, the Federal Reserve? It is interesting, 50 basis points off the table, but 25 basis points, everyone agrees still in the cards. Although, again,
now, of course, what's happening is they're saying, am I going to get another 50 basis points? Because that's what the market is not doing well right now. You say, well, with numbers like that, I don't have to go down very quickly in terms of my rates. I could keep them up. I don't have to do it right now. I want to do it only if I need to do it because everything is fine. So I don't need to. And if inflation looks good at the end of the week, then 25 bips it is.
If Powell took this data at face value, he wouldn't cut. But it's obvious that Powell knows something's up with these numbers.
He does, Charles. In fact, when he was on stage just a few days ago, he mentioned once again Indeed.com job postings, which, by the way, are almost back to where they were prior.
Well, but now they're saying that when he did 50 bips, he did 50 bips because he knows there's a recession coming, right? People were like, "Wow, we're expecting 25. What are you doing? Are you helping Kamala? Are you helping the Democrats, or do you really feel that there is a recession? That's why you're doing 50 bips."
Prior to the pandemic. And he completely understands what happens when you get a 14-year low in the length of the work week. Companies are cutting worker hours to the bone. We haven't seen a number like this in 14 years. And again, that takes away from your income if you're working fewer hours as well. A 14-year low, Charles, it all means it all adds up.
Hey, I got just less than 30 seconds. I want to squeeze it in, though, because the bond market is treating this, I think, the way you normally would.
Right? You see what's happening here? Remember what I told you. It's not so much what is happening in real life, that's what they're saying. They say, guys, in real life, there is a recession. But I don't see it. What do you mean don't see it? People are working double jobs. There's less and less of this, less and less of that. Well, hold on. But what the Fed is looking at the unemployment rate, which is going down. GDP study. All these numbers are okay. No, but in real life, no, but you know what? Right now, we don't care about what's really going on. We care about what the data is because that's what the Fed looks. The Fed looks at the data, and you need to start to understand what it means in the stock market. We need to focus on what is not happening, but what we think is happening, meaning what the data is telling us. Okay, you want to see something? Back to the day trading business. Look, let's go back to GCT. Oh, look what happened. Okay, you get my point? Get my point? Okay, up and down and down. So now, this is it. What we're going to do right now, we're going to take a look at a position in GCT, right? But we're not going to do, because October is, this is pretty dangerous. But what you can do very easily, you could do a position, you could look at GCT technology using my trusted application here. I say trade options, and I said, well, don't give me the October 18th, but maybe give me the November 15th. How about that, right? The November 15th is up 19% on the 35, 5%. So obviously, the closer you are, well, you got to go for the 35 because that one is, so the put, sorry, what am I saying? I need the call. So the call is all over the place. Actually, the call is down, which is good. So the 30 call is down 14% right now. So if I click on add to watch list, and then I say, show me where it is now. So it takes a little bit of time because I need to get back into my, because you need to learn. I need to understand this name again. We need to make some money today. So I need to look at the GCT call is down, the November buy. So it's down. It's down because it was at the 278. Now it's 240. Right. So in the past week, so on Friday it was at 288. Right. Today is what? Today is the 7th, the 6th, the 4th. You need to look at the 4th. So the 4th I was at. This is very easy because you could see what happened to the 4th. I started at 240. I went up to 280, almost $3. Now I'm back to 240. That's interesting. So if I'm looking for 240 to $3, that's not bad. That's not bad. You could buy 100 options. Yeah. From 280 to 240, 280 divided by 240 is 16%. So if you do 5,000 times 16%, that's $800. I mean, look, oh my God, look what's happening. Sorry, I forgot to share my screen here. Look. Look what's happening. Now is the time, people. Now is the time. So what we're going to do, we are going to put a trade because now it's really down. Right. So we're going to trade. We're going to buy. Of course, the market is pushing it down, but that's okay. We're looking for 280, so we're going to buy, let's say, I don't know, 20 contracts. All right, 20 contracts. And we're looking at 40 cents, 40 cents. I guess it's good. This is good. This is good. It's going down. Well, hold on. Let's not get too carried away here. Well, because if I do 20 contracts, that's 2,000. 2,000 times 40 cents, that's $800 if it goes to. And if it does, then it's $400. So if I do 10, it's 400. Okay, let's not get too let's not get too greedy. Okay, so we are in. It has been filled, and we are in at 245 right now. What did we buy it at? We bought it at 245. Okay. We bought at 245 for the market. We bought it. So let me get rid of this. Right. So what we did, we are right here. Okay. So what we want is we want it to around 27 to somewhere around here, please. Thank you. Okay. That's what we're looking at, something like that. Simple as that. I mean, there's nothing simple about it, but okay. So meanwhile, if let's take a look. Let us take a look at ACMR, okay, and understand what is it that we miss and how is this thing trading. So if you look at ACMR right now, here is ACMR. If I look at ACMR, I could see that, you see what's happening here? And ACMR is another one interesting because I'm losing, you see, what has happened in the past whenever you get away from the, well, you hug it. So ACMR is another one. Carefully, because what's going to happen here, we're going to end up around here somehow. So we were at 25. These are big changes, people. Okay, there's 25 to 28. So if I look at ACMR again, it's only down 50%. It was up a lot more. So ACMR looks interesting. So we're going to do ACMR also. And but this is a January 17. Okay, we want to make sure. So we just bought 3 contracts again here at 790 at this level here. So we just bought here, right? And let's see what happens with it over time. Simple as that. Okay. So obviously there's going to be some fat to green, but you see what's happening now. Of course, you got to be careful with ACMR because ACMR obviously is it's the same pattern, right? Which is a great pattern. There's nothing wrong with that pattern. It's just that it's a little more volatile. It's gone a lot more. So this one, I mean, if you make money, you just get out. You don't want to hang around too much on it. Let's put it this way. Right, here it is. Look. We're waiting to get back to our baby right here. What else do we need to do here? What we need to take a look at is I did show you the financial for both. So that's what day trading is. So you're going to go in, you're going to look at it, but like everything else, you need to make sure you understand what it is that you're buying, right? Now remember, ACMR, what they do, they basically clean and do the waveforms for all of the electronic and all the semiconductors. What does GCT do? Well, they basically are in the business of it's kind of an Amazon. They help all of the buying and the selling of equipment and retailers. I mean, and in addition to that, both of their financials are great. In addition to that, both of the business seems to be doing great. I mean, it seems to, financially speaking, right? Then behind us, what we have is there's rates going low and not low, low and not low, but it's creating some volatility, which that's what you want at the end of the day, right? Then, in addition to that, we know these are small companies, and because rates are going down, I like it. I like rates going down because that helps all of the small caps, and that's what you want to do. Okay. So now swing trading is just, instead of doing one day, sometimes you're forced into a swing trading trade, right? You don't want to take a loss if you believe that you're in a good position and then the market is still going your way. The question, of course, the big question that everybody's asking is, oh, by the way, did we take a look at Tesla? Now let's take a look at Tesla. Let's take a look. This is going to be my three go-to stocks. or options or whatever you want to call it. Let's take a look at Tesla to see how Tesla's doing. Ouch, right? Of course, because I'm very cautious as well, and you should do as well, you want to hedge your portfolio, right? You always want to hedge your portfolio. And how do you do that? Well, in this particular instance, what I do have, right, is I do have some puts, S&P puts and Tesla puts. We are up 7.4. This the my put on Tesla is up 7%. My call on ACMR is up 52% already, and my SPY is up 5%. So you wanna hedge yourself, right? Let's see what's going on with ACMR. You see? What did I do here? I bought 4 minutes or 3 at 790. Oh no, it's up, but I'm not up 50%. The option is up, but I bought in between, so it's going to take some time. Okay, so let us take a look. Let us take a look at Tesla, right? So Tesla is the one that you need to watch out. It's important because October 10th is coming up, right? So this is probably like a swing trade. Maybe not making any money today. Now, keep in mind, we're looking for 250 here, 250, 260. Keep in mind though, Tesla is that's for the professional only, right? Handle with care, if you know what I mean. Because look at the P ratio, 69. The forward P ratio is 77. I mean, the stock, not only earnings per share is expected to go down, but the stock is up a lot. So obviously now you're buying 77. Now remember, GCT is P of 10. Of course, nobody knows about it. That even exists. The GPC even exists. But still, I'm paying a lot, right? Now, if you look at what happened on Friday, we kind of, hugging the 250. Now we did well in the morning, and because the day before we ended up at 239 and we shot up to 250. So that was good to unwind that trade. Right? But now remember, this is where you want to be, and then this is where you want to end up. And right now, this thing is back to 239 almost, right? To what is this? 245. It's this name is very, 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 very volatile. So you gotta understand this name very well, right? So 245, we are hugging the low here. We wanna. I think this is, look, I'm above the 50-day moving average, and I'm spending some time, in the doghouse here. We're going to get back up there eventually. And this is what you want to do. Now you have to decide, you want to get in here, you want to get lower. That's a decision I'm going to have to make today. But I think I'm going to get in as I'm going to watch it, and then when it's closer, because it's going to be October 10th. October 10th is coming. And there's a trend, right? There's a trend. The trend is I'm staying above the line. Was it always like that? Well, yes, basically. Now, what has been happening with this name also is that today, is it 12 o'clock already? No. Hold on. Let's decide what's happening here. Today, Tesla stock are moving in most today. Pfizer, obviously, everybody's expecting October 10th, because October 10th, as you know, in my previous video, is the time when we are going to have the whole situation with the robotaxi event. And the robotaxi event, what that's going to do for you is we're going to find out more about AI and Tesla. We're going to find out more what's going on with a cheaper version of Tesla. That's going to be very good. And also how well they're doing, right? So there's lots of things happening at Tesla, and that's going to be like, when Apple used to release its earnings. I mean, it's a new Apple. It was great. So Tesla Robotaxi Day is a make or break moment for Elon Musk. That's right. So I don't know if you're going to make it or break it. I don't know exactly what's going to happen, but I do know there's going to be volatility, and that's why you take advantage. You take advantage of the market in moment of volatility. They always do that. Okay. So what else do we have here? We have, if you look at historically, yeah, when the more I'm looking at it, I'm hugging it, I'm loving it, I don't love it, I hug it. Yeah, this is the only issue I'm having with this one is that when you look at the 52 moving average here, I am going, whoa, I'm really sinking here. That's great. Down 5%, or down 2%. I'm going to get back up here eventually here, right? I want to back here. So it's just because also the reason this is happening is that Tesla is also is a stock, right? And it's part of the market, quote unquote. And the market right now is feeling like this. So you got to be careful, because now you're getting hit with the Tesla issue, meaning that are they going to do well or not on the 10th? But more importantly, what is going to happen when the market actually realize that, you know what, we're going to be just fine, because the market is down right now. The market is down 0.28%. What's going to happen with it, once we realize that inflation is under control on Friday. So Friday could be a very good day. I think Friday is going to be a great day because inflation is under control. I don't know if it's really under control. And frankly, we should also talk the fact that when we talk about inflation, and if you're at home saying, what do you mean inflation is under control? I'm paying a lot of money for my food, and I'm paying a lot of money for the rent. I know. That's what I mean. This world that we're in right now is not the real world, right? This is a world of the paper, of the digital, of what they're telling you is happening. Like this lady that we just talked about, she said, oh, the unemployment is not there, and that what's going on with the unemployment? I understand these numbers are fake. Okay, well, you know what? This is a number that the Fed is looking at, and if the number like the number, if they like the number, then when they're going to look at the 3.2% CPI that we're going to see on Friday, hopefully, then they're going to say, I'm under control. I'm doing a great job. You wanted me to keep a CPI under control? It is under control. In inflation, we'll talk about it. And this, at the end of the day, this is what's happening also from a bigger perspective, right? Between Trump and Kamala, right? What's Trump and Harris? What's going on here? Who is the best for what we want at the end of the day? You're probably going to have, a mix with the president and the Democrats and the House and the Senate. It's going to be a status quo, which is what the market loves at the end of the day. And how are you going to pick which one is best for the economy? Listen, you're going to pick with the one that you like the most. Most people don't understand the strategies. Most people don't understand the economics of it. And frankly, I'm not so sure if the candidate themselves understand it, because at the end of the day, you know the way they talk to you, like your 5-year-old child. Look what I could do for you, what I could do for you, knowing that you may not pass on these things anyway, right? So again, the same thing with the politics, right? It doesn't matter what's really happening, because you don't know what's going to happen on the ground. They could promise you a bunch of things, and most of them probably not going to happen and impact your lives, right? But the point is that, believe it or not, if the Fed believes that one of the candidates is going to be very inflationary, spending a lot of money in the market, spending a lot of money for the economy and everything else, that's going to push inflation up, then rates are not going to come down as much as you thought. So that's what you need to understand, and that's the impact that you need to worry about. Okay, so swing trading, day trading, you could make money on both, but you need to understand the way the name trade, understand the credit, understand the market, and if you're listening to people, understand, why are they saying the thing that they're saying to you? What's in it for them? You could take that to the bank.